AliBaba shares are up over 37% year to date in 2025. And of course, I'm happy about that because I recommended Alibaba stock as a buy several times throughout this year, last updating my recommendation roughly 1 month ago. But I've been getting a lot of questions from investors asking me to do another video on Alibaba stock. So thank you for all those requests. Keep them coming. I read every comment and note every recommendation or every request for a video. Even if it takes me a little bit longer to make some videos compared to others, I'm making a note of all the requests. Thank you again for those. So let's take a look at Alibaba to see if at the new higher price, with, of course, all of the macroeconomic and geopolitical tensions, should Alibaba stock investors continue holding? Should they buy more? Should you sell? Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Alibaba last updated investors on May 15th. And in that investor report, they told investors that for the quarter and for the first fiscal year, they demonstrated ongoing effectiveness of their user-first AI-driven strategy. Core business growth continues to accelerate, and I have been seeing that with Alibaba. After several years of decelerating revenue growth and finding it challenging to generate revenue growth, over the last few quarters, Alibaba has managed to accelerate revenue growth again, especially for its AI-related products. So they went on to say that this growth is driven by strong demand for artificial intelligence. Its cloud intelligence group, which is similar to Amazon's web services, that quarterly revenue growth accelerated to 18%, with AI-related product revenue achieving triple-digit growth for the seventh consecutive quarter. Absolutely massive growth for Alibaba's AI segment, as we've been seeing with countries outside of China and in the United States especially. AI growth is booming, and we're seeing a similar trend here in China. Of course, Chinese companies making great progress, especially given that they don't have access to the most cutting-edge, advanced, accelerated GPUs for their data centers optimized for AI. Remember, NVIDIA has been restricted from selling its best products into the Chinese market, but thankfully, just this week, and I did a video about this, looks like NVIDIA and AMD will get approval to sell a less technologically advanced version of their products into China again. So with that ability to sell, I'm reasonably confident that the Chinese companies will buy up as much as possible to load up on these accelerating computing capabilities, just in case there's another uh, headwind, another restriction, more geopolitical tension. They want to go ahead and have these technologies on hand just in case. So in its most recent quarter, which ended March 31st, Alibaba reported revenue growth of 7% and adjusted EBITDA growth of 36%. In US dollar terms, their revenue increased to 32.6 billion and its adjusted EBITDA rose to 5.76 billion. Their operating profit margin is relatively healthy. The cash flow from operations are relatively healthy. The big difficulty for Alibaba has been growth on the top line, revenue growth. And seeing the company grow revenue by 7% is one of the best quarters they've had in recent years in terms of top line revenue growth. I mentioned operating income is solid and increasing. 93% increase in the company's operating income, mostly due to rising expenses in the same quarter last year. So they had a few costs that were unusually higher in this same quarter last year. And so when you're comparing with that period where this time you don't have those one-time costs, it makes your operating income growth look much better than it actually was. That's why for this specific quarter, I like to look at the adjusted EBITDA number, which excludes some of those costs and shifts those into appropriate periods. And you see 36% revenue growth, adjusted EBITDA, which is still very good growth, but not 93% growth in operating income. So now let's get a look at valuation. And as I mentioned, I've had Alibaba stock rated as a buy all year long. I last updated that recommendation on June 20th. And of course, I'm happy to see that it's working well. It's been one of my better recommendations this year. It's up over 37% year to date in 2025. But let's look at valuation. Let's see if the stock has gotten more expensive or if the market price increase has been justified due to increases in profitability. So Alibaba is trading at a forward price to earnings of 13, near the higher end of where it's traded at this year, but it's still a fraction of the valuation of other companies, other similar companies outside of China. If you look at the e-commerce companies like Sea Limited, Mercado Libre, Amazon, and others, these companies are trading at forward price to earnings ratios on average around 30. Alibaba is trading at 13. So, embedded in this lower valuation is the geopolitical risk associated with investing in stocks in China. So, I believe that's been embedded in its valuation. That's a fraction of the valuation of similar companies operating outside of China. And by the way, this chart, I'm getting it from fiscal.ai. There's a link in the description if you want to evaluate stocks using their services. I've also done a proprietary discounted cash flow valuation using my own framework for making these calculations. And the intrinsic value per share I calculated for Alibaba stock is $146. Now, the current market price, as we saw earlier, is $115. So there's still room, there's still upside for Alibaba stock, even at the higher valuation after increasing by this magnitude. So, to update my recommendation, what do I think about Alibaba stock right now? I still think the stock is a buy right now, and I'll update that recommendation here. Of course, the risks are notable, and right now, the biggest risk is the local economy in China. How will it hold up given the increase in tariffs that the United States is placing on Chinese products? That's the big question mark. So far, the early data I'm seeing is that the Chinese economy is holding up relatively well. The tariffs have been reduced from the levels of over 100% that they were at initially following the tit for tat escalation in April. They've since been reduced down closer to 50%, and there are several exclusions, like for electronics, smartphones, semiconductors, etc. So the hit to the Chinese economy could be mitigated as a result of that. Also, I saw recent data on Chinese exports still increasing by over 5% year over year, most of those exports going to Europe and other Southeast Asian economies. So Chinese businesses are finding other places to sell their products as a result of losing some US customers. So far, the economy is holding up well, but I'm still looking at the risks as a result of those tariffs and increasing geopolitical tensions. Overall, I still think Alibaba stock is a buy, even considering those elevated risks right now.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.